Well, what I have to say is that the banks have very quickly, after a short time of uncomfortably wearing sackcloth and ashes for their previous crimes, have once again shown who is really boss in this economy. And Mr. Lenihan, the hapless Minister for Finance, begs to use what he calls commercial market realities for allowing this to go ahead. So the great god of the market is once again dictating that unfortunate mortgage payers are going to be crucified. It is quite outrageous. It absolutely underpins, again, the argument that I've been putting forward for a long time now.
Nationalise the banks.
They should have been nationalised, taken into public ownership, not to bail out their bad assets, but to democratise them, put them under the control of the public and the taxpayer, and then we wouldn't have the likes of this going on. It's quite clear that what they want to do is they want to crawl out of the chasm that their greed thrust them into, and then put the wagon back on the rail and start the profiteering fest again. And if they're allowed to do that, let's remember what the consequences will be. Let's remember that there is a whole generation of people who were trapped into these massive inflated mortgages throughout the greed fest that was the property boom. They are stuck with those for the next 35 to 40 years. So if the banks are allowed to get away with this, those people, as a result of this criminal greed and the huge profits that were made at that time, will continue to be crucified. It's absolutely immoral and wrong. The government is, as long as you continue to rule on the basis of the bowing the knee to the market, then ordinary people, working people, mortgage payers are going to be crucified in this way. That's the simple reality.
I want to bring Andrea in, but just before I do, if I can go back to you, John McGuinness, to clarify your understanding of what the government could do in terms of stopping this. I mean, after all, we gave these banks a massive bailout when we supported them with the guarantee. We're pumping billions into these banks. NAMA is being set up. Initially, it looks like it's going to take 30 billion worth of loans to property developers off the banks, the balance sheets of the banks, and shift it over onto the NAMA structure. So we're giving huge bailouts to the banks. What is your understanding about what way the government can stop the banks from raising interest rates?
Well, first of all, we've allowed the banks to rewrite their whole business plan for their customers. We've pumped in taxpayers' money. But they, in turn, are not willing to release some of their customers for the long-term commercial high-interest loans that they're locked into. And I believe that they now have a responsibility, because of taxpayers' money that's keeping them going, to rewrite their business plan directly down the line to their hard-pressed customers.
But why didn't we do that at the time that we were doing all these negotiations? I know the initial one was done very quickly when the Taoiseach announced that the banks would have collapsed if the guarantee hadn't come in. But in the months following, when the decisions were taken to pump billions into our major banks, why weren't then proper regulations put in place and safeguards put in place to ensure the banks wouldn't turn around several months later and say we're going to raise the mortgage interest rates?
Because it's a changing situation. They borrow their money outside of the country and so on. They don't have enough of their own reserve. So therefore it is a changing situation. We should prepare ourselves now to respond to that. The regulators is in place. We have representatives of the taxpayer, if you like, on the banks and the boards and so on. The boards have changed. And we should be prepared as government to take a stern view in relation to this, to set out a policy and to change the situation as we did for the banks, insisting that they change the circumstances of the mortgage interest rates for their customers.
But Brian Lenihan, the Minister for Finance, is at the moment does not appear to be making that decision. He seems to be taking a line that it is okay for the banks to do this, that there is a commercial reality. They have to actually make sure there isn't a deficit between what they're paying out in these interest rates borrowings that they have and what they're actually receiving in from the mortgage holders.
Yeah, I understand his position, but having looked at the banks, he does need to take a stronger position given the new set of circumstances.
I know, but why isn't he? You see, this is the thing. This is the puzzle, I think, John McGuinness, for quite a lot of people in this country, because we seem to be pouring ever more bigger sums of money into the banks. We're setting up NAMA now, which is going to leave us with a national debt for God knows how long. I mean, the speculation is it could be 60 to 70 billion by the time we sort them all out. And we're seeing ACC beginning to pull the plug on major developers, which is going to potentially also lead to another bit of a problem in terms of NAMA. And it seems amazing that when we're going through all of this, that we're not being tougher on the banks, that we're not taking a stronger stance to make sure that they don't make those kinds of decisions without coming to the Cabinet and having a proper discussion with the government.
And what the public and politicians are saying, aside from Brian Lenihan, is that we need to move the mindset to deal with the banks. And this is a new ground for any government to enter onto, but we have created a new situation with the banks. We can't allow them to rush to pay back their money, to get out of the government guarantee, to go back to their old way of doing business. This can't be business as usual, and therefore the government has to respond accordingly. It's a new set of rules, and we have to protect the businesses down there, the mortgage holders down there, that are hard-pressed and will indeed be in difficulty if we allow this to happen.
Okay,
the number of repossessions has grown enormously over the last number of months.
Far from doing what John McGuinness is suggesting, there is another potential scandal that's revealed in the Mail on Sunday in an article by Luke Byrne, where he is suggesting that the legislation that is being prepared to allow NAMA to buy land assets is going to provide that they will be bought at inflated values over and above what the market value of today would be, and that that they can be based, that the values which will be paid can be based on quote-unquote future increase in value. Now, this is quite incredible if this is true. In other words, that NAMA, on behalf of the taxpayers, is going to be forced to pay over the market odds to these entities which use the market to the nth degree when it was in their favour to inflate the
You mean the
price
property developers now, is it? Who are the entities you're talking about?
Well, the people who are holding the bad loans, the banks, yes, and the developers, of course, benefit as well. But if this is true, then it's quite incredible. And it says here that a senior government aide said that the draft legislation would allow NAMA to purchase the loans for more than their current market value in anticipation of an increase in the value of land.
Yeah.
Now, that needs to be looked into, and Deputy McGuinness, you'll have an opportunity to vote on this legislation, or on presumably down the line, or on the details of it. So I would suggest that there is something that should really be checked out.
Andrea
This
Martin,
is something that I understand has arisen on. I mean, they don't come from a banking background at all. That there are, in other international instances of banks setting up toxic banks. How do they value? I mean, I always laugh when we have discussions about current market value. There is no current market value. We have got no baseline at the moment because nobody is buying property.
Yes.
It is purely notional. So this model has been suggested on future land values, which I would agree is a dangerous way to go in terms of the potential for overpricing what are valueless assets effectively at the moment. And the banks are facing, the NAMA is going to face potential challenge from both the banks themselves and the property developers.
But my understanding was when the idea of NAMA was being set up, and we were all very vague initially about what it was going to do, I thought that the government was going to get the property assets at reduced values, that the whole idea of pumping state money in was actually that we would be getting a bargain, so that when things improved in the future, the state would sell those assets again and make money. Is that correct, John McGuinness? Wasn't that the idea originally?
This, I haven't seen the legislation, but this is a formula that will have to be put into the legislation or be part of it in terms of how you actually take the assets from the bank, value them, and as you say, there is no baseline at present. How do you value a house, a property, or even a piece of agricultural land for future zoning? So there has to be, that formula is pretty simple in the way it's put in the Mail, but it's not actually correct, I think, in terms of the complex formula that will be needed to deal with this as they take the assets into charge and create some sort of notional value on their future potential in terms of development land.